Avoiding the debt trap. One introduction. In today's society, with the diversification of consumption patterns and the development of the credit market, individuals and families face increasing risks of debt. The prevalence of credit cards and the convenience of various borrowing products have provided unprecedented convenience for people's consumption. However, they have also brought the risk of excessive debt. Avoiding the debt trap has become a major challenge for modern individuals. From an argumentative perspective, avoiding the debt trap not only requires individuals to have a good sense of financial management, but also to master practical financial tools and strategies. Reasonable use of credit cards, careful assessment of borrowing risks, and the development of scientific budgeting and savings plans are all important methods to avoid the debt trap. In addition, strengthening financial education and increasing personal understanding and application of financial knowledge are also key to long-term financial health. In this context, this video aims to provide a series of suggestions and strategies for avoiding the debt trap, helping viewers effectively manage their financial situations while enjoying the convenience of credit. This includes in-depth discussions on credit card management, assessment of borrowing risks, budgeting and savings planning, as well as financial planning and education. We aim to explore how to maintain financial freedom and security in the modern economic environment. Through learning from this video, we hope viewers can enhance their financial management abilities, learn to satisfy current consumption needs while laying a solid foundation for the future financial security of themselves and their families. 2. Credit card management. In modern society, credit cards have become an indispensable financial tool for many people in their daily lives. However, improper use of credit cards can easily lead to excessive debt and even trap individuals in a debt cycle. Therefore, managing credit cards responsibly becomes a crucial step in avoiding financial risks. The ubiquity and risks of credit card usage. Credit cards provide consumers with a convenient way of credit, allowing users to make purchases before payment. This convenience often helps people address short-term financial needs. However, the high interest rates and penalty mechanisms associated with credit cards can rapidly increase individuals' debt if not managed properly. Recommendations for responsible credit card usage. Full and timely repayment. To avoid paying high interest charges, it's advisable to develop a habit of paying off the full amount of credit card debt every month. This not only avoids interest fees, but also maintains a good credit record. Avoid overspending. Use credit cards reasonably according to one's financial capacity, avoiding spending beyond one's repayment ability. Developing a monthly budget and incorporating credit card expenses into it helps control spending levels. Exercise caution with cash advances. Cash advance features on credit cards typically come with high fees and immediate interest accrual, so they should be used cautiously. Understand credit card terms. Before applying for or using a credit card, it's essential to carefully read and understand its terms, including interest rates, annual fees, penalty terms, etc., to choose the credit card product that best suits one's needs. Analyzing credit card traps. Minimum payment trap. Only making the minimum payment leads to the remaining debt accruing high interest charges, resulting in increasing debt over time. Credit card rewards trap. Some credit cards attract consumers to increase usage through reward points or cashback offers, which may tempt users to overspend, ultimately leading to debt. Through the above arguments, it can be seen that responsible credit card management is one of the important strategies to avoid falling into debt traps. By implementing full and timely repayments, controlling spending levels, exercising caution with cash advances, and understanding and selecting suitable credit card products, individuals can effectively mitigate the financial risks associated with credit cards and maintain their financial health. 3. Risk of borrowing. In today's society, borrowing has become a common way for individuals and families to manage their finances. Whether it's a mortgage for buying a house, a car loan, or consumer credit, these play important roles in people's daily lives. However, borrowing comes with risks. If not managed properly, it can lead to substantial debt accumulation and even financial crises. Therefore, from a logical standpoint, it's crucial to assess and control the risks of borrowing responsibly to maintain personal and family financial health. common forms of borrowing and their risks. Mortgages. As the largest loan for most families, the interest rates, repayment terms, and loan amounts of mortgages have long-term impacts on household finances. Fluctuations in the real estate market can affect property values, thus affecting the security of the loan. Car loans. Financing a car purchase through a loan also requires attention to the loan's interest rates and repayment terms. Cars as assets depreciate rapidly, often faster than the repayment rate of the loan. Consumer credit. Credit used for daily expenses often carries higher interest rates. Failure to repay on time can lead to rapid accumulation of debt due to accrued interest. Recommendations for evaluating and choosing loan products. Read loan contracts carefully. Before signing any loan contract, it's essential to read and understand its terms, including but not limited to interest rates, repayment terms, prepayment terms, etc. Assess repayment ability. Before applying for a loan, one should assess their repayment ability based on their financial situation, avoiding excessive repayment pressure that might affect daily life or lead to debt traps. Compare different loan products. One should actively compare different loan products in the market and choose the most favorable and suitable loan scheme for their needs. Risk management strategies. Establish an emergency fund. An emergency fund can provide assistance during sudden economic situations, avoiding the need to resort to high-interest loans due to temporary fund needs. Insurance planning. Adequate insurance planning, such as life insurance and health insurance, can provide financial protection in case of accidents, alleviating debt pressure. Through the above arguments, it can be seen that understanding the risks of borrowing, carefully assessing one's repayment ability, choosing appropriate loan products, and developing effective risk management strategies are crucial for avoiding debt traps and maintaining financial health. Only through proper planning and management can individuals and families enjoy the convenience of borrowing while maintaining stable financial conditions and staying away from debt traps. 4. Budgeting and saving. In the process of avoiding debt traps, creating reasonable budgets and establishing effective savings plans are crucial. Through logical analysis, we can delve into the roles of budgeting and saving in financial management and how to implement these strategies to maintain a healthy financial status. The importance of budgeting. Budgeting is a clear statement of income and expenditure plans for a certain period in the future for individuals or families. It helps people allocate resources reasonably and control expenses according to their financial goals and actual situations, thus avoiding unnecessary debt. Expense control. By creating a budget, one can clearly understand their spending patterns, identify non-essential expenses, and make corresponding adjustments. Priority allocation. Budgeting helps people allocate funds according to priorities, ensuring that important expenses such as mortgages and education expenses are safeguarded. Achieving financial goals. Whether it's saving, investing, or debt repayment, budgeting is the fundamental tool for achieving these financial goals. Establishing a savings plan. Savings are not only a preparation for future uncertainties, but also an important strategy for avoiding debt traps. Establishing an emergency fund. An emergency fund is savings used to deal with unexpected events, usually recommended to be equivalent to at least 3 to 6 months of living expenses. Setting savings goals. Based on one's financial situation and future plans, setting short-term and long-term savings goals and taking concrete steps to achieve these goals. Utilizing automatic transfers. Setting up automatic transfers from checking accounts to savings accounts can help people develop a habit of regular savings. Practical recommendations. Regularly review and adjust budgets. With changes in income and expenses, regularly reviewing and adjusting budgets is necessary to ensure the effectiveness and practicality of budget plans. Smart spending. In daily consumption, methods such as comparing prices, using discounts and promotions, and controlling impulse purchases can effectively reduce unnecessary expenses. Increasing income. In addition to controlling expenses and saving, seeking opportunities to increase income is also an effective way to improve financial situation. Through the above arguments, it can be seen that reasonable budget planning and effective savings strategies play an important role in avoiding debt traps and achieving financial freedom. By implementing these strategies, individuals and families can enjoy the present while also laying a solid foundation for future financial security. 5. Financial planning and education. In contemporary society, with the continuous changes in the economic environment, the increasing demands of individual lifestyles, financial planning and education have become crucial cornerstones for achieving financial freedom and security. Through logical analysis, we can delve into the roles of financial planning and education in personal financial management and how to effectively implement financial planning and enhance financial knowledge. The importance of financial planning. Financial planning refers to the formulation of a set of rational financial strategies based on the financial situation, lifestyle needs, and future goals of individuals or families, including savings, investments, insurance, and tax planning, among others. Reasonable financial planning can help individuals and families effectively manage funds, pursue long-term financial goals, such as buying a house, education, and retirement. Setting clear financial goals. The first step in financial planning is to define clear financial goals, which should be specific, measurable, and achievable. Asset and liability management. Understanding one's assets and liabilities is crucial for developing effective financial strategies. Risk management and insurance planning. Mitigating risks through the purchase of appropriate insurance products to safeguard financial security in the event of emergencies. Investment planning. Selecting suitable investment channels according to one's risk tolerance and investment goals to achieve wealth appreciation. The necessity of financial education. Financial education refers to the enhancement of individuals' knowledge and capabilities in financial management, investment, and economic decision-making through learning and training. In modern society, financial education is not only crucial for individuals, but also has profound impacts on the economic health of families and society. Improving the quality of financial decisions. Good financial education can help people make more rational and effective financial decisions, avoiding unnecessary economic losses. Enhancing risk awareness and prevention capabilities. Through financial education, individuals can better understand potential risks in investment and consumption and learn how to avoid and manage these risks. Fostering a sense of responsibility and discipline. Financial education can also cultivate individuals' awareness of financial responsibility and self-discipline, promoting healthy consumption and investment habits. In conclusion, financial planning and education play important roles in individuals' achievement of financial freedom and security. By developing rational financial planning and continuously improving financial knowledge and management capabilities, individuals can effectively manage their current financial situations and prepare for future uncertainties, thereby achieving long-term financial goals. 6. Conclusion. With our comprehensive discussion on strategies to avoid debt traps, from using credit cards wisely, cautiously assessing borrowing risks, to formulating scientific budgeting and savings plans, we hope that this content can provide practical assistance and guidance for everyone in financial management. In today's consumerist society, amidst various temptations and pressures, maintaining a rational consumption attitude and solid financial management strategies are particularly important. Through learning from this video, we hope the audience can deeply understand the importance of avoiding debt traps and grasp effective methods to achieve financial health. Therefore, here we make the following appeal to each viewer: raise financial awareness, actively learn and enhance personal financial management knowledge, which is crucial for preventing debt traps and achieving long-term financial security. Practice rational consumption. Persist in rational consumption in daily life. Avoid unnecessary expenses, especially regarding the use of credit cards and various loan products, which should be approached with caution. Stick to budgeting and savings. Establish and adhere to personal or family budgets while building and maintaining good savings habits to prepare for potential economic fluctuations in the future. Plan for future finances. Regularly assess and plan for personal or family financial situations, including debt management, investment, and retirement planning, to ensure the realization of financial goals. We encourage every viewer to put these strategies and suggestions into practice, not only to avoid debt traps, but also to create a more stable and brighter future. Remember, Financial freedom and security are achievable goals for everyone through diligent efforts. Thank you for watching and learning. If you have any questions or need further guidance on financial management, feel free to leave a comment for discussion. Let's move forward together towards the goal of financial health and freedom.